Greetings everyone. In this video, we are going to look at the Union budget for the fiscal year 2026-27 from a high-level perspective. Not just a list of numbers, but a story of direction, priorities, and strategic choices that the government of India is making for the economy and for citizens. The Finance Minister Nirmala Sitharaman presented this budget on 1st February 2026 in Parliament. This marks her ninth consecutive budget presentation, a record in independent India, and it comes at a time when the economy is navigating global uncertainties, inflationary pressures, and aspirations for faster growth. If we had to sum up Budget 2026 in one sentence, it would be this: a budget that emphasizes growth through investment and infrastructure while maintaining fiscal discipline and expanding opportunities for citizens across sectors. That means the government is willing to spend more in targeted areas, but it has not abandoned fiscal constraint. Instead, it is using expenditure in a more strategic way, balanced, focused, and future oriented. Before we dig into specific number, let's understand the economical background against which this budget was presented. In the last few years, India has been one of the fastest growing major economies in the world. For 2026-27, the nominal GDP, which includes both price changes and real growth, is projected to grow at around 10%. This indicates strong domestic demands, resilient investment, and increasing consumption. At the same time, such as geopolitical tensions, fluctuating crude prices, and supply chain disruption continue to influence the macroeconomic environment. Inflation had moderated compared to the pandemic period, but it remains sensitive to external forces. This context is critical to understand the choice made in Budget 2026. It reflects a cautious optimism. Now, let's talk size. For the fiscal year 2026-27, the government has estimated its total expenditure at around 53.5 lakh crore. This figure includes all revenue and capital spending by the central government. To put this in perspective, in the 2025-26 revised estimates, total expenditure was around 49.6 lakh crore. In comparison, the 2024-25 actuals were lower, showing that government spending has been rising consistently. This increase of nearly 4 lakh crore rupees, close to 8% growth year over year, signals that the government is willing to spend more to drive economic growth and support key sectors. Government expenditure must be supported by receipt, basically where the money comes from. There are three broad categories: tax revenue, money collected from direct and indirect taxes; non tax revenue, earnings from government services; fees, dividends from public sectors enterprises; and other sources. Capital receipts, primarily borrowing and disinvestment. For 2026-27, tax revenue is projected at about 28.7 lakh crore rupees. Non-tax revenue contribute a smaller share. The remaining gap is made through borrowing, which we will discuss shortly. The key takeaway here is that India still relies predominantly on taxes as the core source of funds, but strategic borrowings allows the government to invest in areas that fuel growth. Now, let's look at expenditures, where the government plans to spend this money. Expenditure broadly split into revenue expenditure and capital expenditure. Revenue expenditure are day-to-day spending on salaries, subsidies, pension, interest payments, and maintenance. Capital expenditure are long-term investment in infrastructure, health, education, energy projects, and other productive assets. In this budget, a significant proportion of spending has been directed toward capital projects, signaling a deliberate push toward long-term growth and productivity enhancement. Capital expenditure, often referred to as capex, is one of the most closely watched metrics in any budget because it reflects future oriented planning. In budget 2026, capital expenditure has been pegged at approximately 12.2 lakh crore rupees, which is substantial increase compared to previous year. Why does it matter? Because capex create jobs, build infrastructure, improve logistic networks, enhance connectivity, and boost economic activity. Big projects covered includes roads, railways, ports, energy grids, and digital infrastructure. Programs aimed at urban development and regional connectivity are also part of this push. It isn't all steel, cement, or concrete. The budget also places importance on human development, particularly sectors like health, education, skill development, and social welfare. In health, Allocations are designed to expand access to quality services, strengthen public health infrastructure, and prepare for future health challenges. In education, emphasis continues to be on quality improvements, vocational training, and alignment with industry needs. In essence, the government wants to build human capital along with physical capital, a combination that contributes to inclusive long-term growth. For a country where a significant proportion of population depends on agriculture directly or indirectly, rural spending remains crucial. Budget 2026 continues irrigation and water conservation schemes, rural electrification, agriculture credit expansion, price support mechanism. All of these efforts are aimed at improving rural incomes, stabilizing farm economics, and ensuring that rural demand, which drives a large part of overall consumption, remains robust. A major push area in this budget is manufacturing and industry. In recent years, India has emphasized becoming a manufacturing hub, whether in electronics, pharmaceuticals, automobiles, or emerging sectors like semiconductors and biotech. Budget 2026 outlined incentives and infrastructure support aimed at attracting investment, improving industry competitiveness, and generating employment. For example, manufacturing zones, technology parks, and export linked schemes are expected to be backed by capital funding and policy support. Let's move to taxation, an area that directly affects individual and businesses. In budget 2026, the personal income tax slabs have largely remained unchanged, which signals continuity and minimal disruption for taxpayer. There were tweaks in indirect tax structure and compliance mechanism intended to improve revenue efficiency without placing undue burden on consumers. This approach reflects a balancing act, maintaining revenue buoyancy while safeguarding taxpayer interests. A critical metric in any budget is the fiscal deficit, essentially the gap between government expenditure and receipts. For 2026-27, the fiscal deficit is targeted at 4.3% of GDP, slightly lower than the 4.4% estimated in the revised estimate for 2025-26. At the same time, the government plans to borrow around 17.2 trillion rupees through market instruments. This enables it to fund capital plans while continuing fiscal consolidation. Moreover, the debt to GDP ratio is projected to stay around 55.6%, a marginal decline that indicates gradual improvement in India's debt dynamics. Now let's neutrally understand which sector attract priority. Infrastructure gets a large portion of capex funding, manufacturing and technology to support jobs and exports, health and education for long-term human capital, agriculture and rural development sustaining GDP and rural demand, defense modernization, strategic capability focus, tourism and services aimed at reviving service sector growth. These are not value judgments, simply an observation of where the budget allocation trend higher. When we step back from individual line items and look at how the priority have been organized, budget 2026 signals growth orientation driven by capex and industrial incentives, fiscal discipline, managed reduction in deficit target, inclusiveness through rural, social and human capital spending, strategic positioning in technology and defense sector. This multidimensional approach is aimed at creating a resilient, modern and competitive economy. So, why does this budget matter? Because it sets the economic direction for the next financial year, affecting growth, jobs, prices, taxes, investment, and opportunities. Here's a question for you. Do you think budget 2026 focuses more on growth or on welfare? Share your thoughts in the comments below. Your reasoning matters. If you found this explanation insightful and want deeper breakdowns of specific sector impact, stay tuned for the next video in Union Budget 2026 series. Thank you for watching and let's keep learning the world fact by fact.